Hey folks, Rachana Ranade here and I welcome you all to the IPO summary video of Brainbees Solutions Limited. And you might be like, what? Which company? FirstCry. You might be knowing this company by the name FirstCry. Okay, so it's going to be another shoot and release video, and you know the drill. What is to be done? That it's a shoot and release, and that is the reason why. Just in case if I fumble upon some word, I'm going to give the corrections in the pinned comment. So don't forget to check out the pinned comment after you listen to the full video. And of course, if you want to invest in any IPO, not just, we are not talking about any specific IPO, but in general, if you want to invest in IPOs, you need to have a demat account, and the link for opening a demat account is there in the description box and in the pinned comment. So with this, let's get started and understand about some basic points about FirstCry. First come first, what is FirstCry? It's India's largest multi-channel retailing platform for whom? Mothers, babies and kids products. So I'm sure you know about this. You might have even seen stores of FirstCry, and for mothers, babies, kids, you will get a lot of products out there. But why do we call it as a multi-channel retailing platform? The reason is simple, because they sell it online, they sell their products online, they sell it through company owned stores, they sell it through franchisees owned stores, and also general trade retail. Okay, so quickly, one more time. Who is their target audience? Number one, mothers, babies and kids. Okay, then how do they sell it? Online, their own stores, through franchisees and general stores. Okay, I hope till here it is absolutely clear. But finally, what do they sell? They sell everything like baby clothes, toys, strollers, car seats, maternity wear, and a lot more. Okay, now we also have to understand few more points about the company, that whenever it is about FirstCry, first things that comes to your mind is about childcare. And childcare is a non-discretionary essential expense. So basically non-discretionary is nothing but an essential expense. And that is the reason why parents definitely know that there is a need to spend on the child for a longer duration, because kids grow so fast that even if you buy a few clothes, maybe within like 6 to 8 months they may require to buy newer clothes. Same goes with footwear as well, right? Their taste changes, and that is the reason why these parents become like a perpetual customer for the company. And that is the reason why they say that once we establish a connection with the parent, their cash flows from parents can become a little bit predictable. Okay, now if I were to understand about the industry analysis, some again interesting points out here in the industry analysis. India is among the youngest nations in the world. Median age is approximately 28 years as at 2023. And because we are among the youngest nations, of course we have an ability to adapt to newer and newer trends, right? India is also India also has one of the largest populations of children globally, with approximately 30.6 crore children under the age of 12 years of age. And this population, 0 to 12 years ka population, accounts for approximately 21% of India's population as at 2023. Now if you were to check this specific graph, you will see that out of the total market, the major market is of apparel, which accounts for almost 68% as at 2024, followed by consumables, then hard goods, and then toys and games. Okay, now also let's understand how much does the industry have a potential to grow. So all in all, in India, the overall market is estimated to grow at a CAGR of 12 to 14%, and in the years 24 to 29 it is expected to grow at 13 to 15%. Okay, sounds interesting, 13 to 15%, yes. But now if I were to compare industry in India with other countries, something like USA, UK, UAE, Kingdom of Saudi Arabia, China, of course. In that case, how much are Indian parents spending yearly for their children? Now, on an average, an Indian couple may spend around 9,000, roughly 9,200 to 9,300 per child per year. Okay, and if I were to compare this with China, it is around 45,000. Saudi Arabia, it is around 61,000. UAE, UK, and US is to like is 2,10,000. This is like too much high. But even if I were to compare ourselves with China, we still have a large headroom left, and that is the reason why it is a growing industry, is what I can definitely say, right? Now, talking about which are the business segments for FirstCry. So I hope you are understanding that the previous one or two points were about industry. Now we are drilling down specifically to FirstCry. So if I were to show this table to you, it will be much more easier for you to understand. How do they earn? What are their key segments for their revenue? Number one is their India multi-channel, which accounts for almost 70% of their revenue. Now, whenever I'm talking about India multi-channel, means what? They are earning revenue through the points that are discussed: online stores, through their own brand outlets, through franchisee owned outlets, through general stores. All this will account for what? 70.66% of their revenue. Internationally also, they are selling 11.63% of their revenue comes from international markets. But where are they selling? In areas like in countries like UAE and KSA, that is nothing but Kingdom of Saudi Arabia. Now they also have one more segment, if you see here, Global Bees brand, and this is something interesting because this brand covers four key categories: home utilities, fashion, lifestyle, appliances, and beauty and personal care. Home and personal care. So whenever I talk about FirstCry, and if someone would have told you that they also earn through sale of appliances, you might be like, how is this possible? Or fashion, beauty. So that is not sold directly under the brand name of FirstCry, but it is under the Global Bees brands. Okay, so all in all, I hope you have understood the split. This accounts for almost 18.66% of the revenue. Now talking about the key risks, we do have one or two key risks here. Again, all data that I'm talking about is taken directly from their RHP, so this is not a risk that I have discovered myself. I'm just telling you whatever is being has been given in their own RHP. Okay, so one of the key risks that is mentioned in their RHP is certain subsidiaries had observed material uncertainties in relation to their ability to continue as a going concern in their audit report. And if such subsidiaries are unable to continue as a going concern, it may have an adverse financial impact on their company and their 107 subsidiaries, as they have provided financial support letters to ensure. Okay, whatever, just for you to tell what do we mean by continuing as a going concern. See, going concern is something which is like the possibility of the company to continue for a foreseeable future. And what do we mean by foreseeable future? At least 1 year. In simple words, if the auditor feels that this company will continue for at least next 1 year, then it is thumbs up. But if the auditor feels that maybe in the next 1 year itself the company may close down, I'm not specifically talking about this holding company, I'm talking about few of the subsidiaries of FirstCry. So if the auditor of the subsidiaries of FirstCry has felt that, oh, they may not continue for even 1 year, they have mentioned it there in their auditor's report about the question mark on the ability of the company to continue as a going concern. Is that one of the key risks? Absolutely yes. The second key risk that they have mentioned again in their RHP is that they have incurred losses in the past periods. They may continue to do so in the future, and that may adversely impact their business and the value of equity shares. So we can see their losses have been increasing from 78.6 crores to 486 crores, slightly on the downward trend to 321.5 crores. Still, is that a big number? Yes. Okay. There are some pending litigations also. Totality may against the subsidiaries is around 195.21 millions. By the subsidiaries is not that material. Against the company is 59 million. But generally what we do is we compare this number with the profits to understand how material this number is. But unfortunately the company is in losses, so I just can't compare this with profits. Even if I were to compare it with revenue, then in that case this number seems to be a little bit on a smaller side. Okay, but how much is their revenue? Revenue from operations, if you see, that has gone up from 24,012 million to 56,000. I'm rounding it off to 64,000. So a decent enough growth if you see, your growth percentage in the latest year from 23 to 24 has been at 15%. But if I were to talk about loss for the year, I did discuss about this, from 78 crores losses to 321.5 crores of losses. Adjusted EBITDA and EBITDA margins are also mentioned here. If I were to talk about the peers, the RHP says we have no listed peers, so direct comparison is not possible. Now, if I were to talk about the objects of the issue, generally what other companies do is that they will say, we are going to use this money for, let us say, capital expenditure, or we are going to use this money for repayment of loans, okay, or for general corporate purpose. But here they have written as good as an essay where they have mentioned about what are they going to do with this money in absolute detail. So what you can do, maybe just pause, take a screenshot, have a look at it. So it could be right ranging from opening up new stores to setting up a warehouse to lease payments for their identified modern stores, to what it still continues, right, till investment in subsidiaries, also funding inorganic growth. So this is huge. I mean, a lot of objects of the issues is what they have mentioned in their RHP. What about the IPO details? It opens on the 6th of August to 8th of August. You can read this. Nothing to be specifically told here or taught here. Again, you can just pause and understand. Of course, one important point here is that out of the total issue of almost 4,200 crores, 1,666 crores is fresh issue and balance is offer for sale. all in all, whenever you're deciding whether to apply for any specific IPO or not, there are two things to be considered. Number one, about the financials of the company. Do you feel they're interesting or not? What do you feel about the business model of the company? What are the risks, industry? So many things to be understood. But number two, what you have to understand is how is the overall market position as well. If you understand right now, the markets are not that in a great mood. So it could happen that irrespective of how the IPO is, if the overall condition of the market is not that great, the IPO may not get a very great response. So here I'm not talking about how the company is, I'm talking about how the market is right now, which is definitely not in its greatest of health. So just in case if you don't know what has gone wrong with the market, I've done a separate live stream explaining in absolute detail as to why the markets have crashed. If you want to check out that video, the live stream, you can check it. I've given the link in the description box and in the pinned comment. Please tell me how did you like this short summary, roughly around 10-minute summary of a 680 plus pager RHP. If you did like it, please consider smashing the like button, share this video with your friends, and I'll see you in the next one. Till then, take care. Jai Hind and bye bye.